So, chapter 16, control account. So, it says it's an account which acts as a check on individual's account within the ledger whenever the trial balance fails to balance. So, whenever the trial balance fails to balance, and you try to use the suspect account, it's not working, then you have to use the control account. So, control account is prepared by someone who is not part of those that prepared the ledger. So that means the error would have been from the ledger at the beginning of the business. So you use the control account to check whatever the error is. So we have two types of control account. We have the sales ledger control account and purchases ledger control account. But before we go, for sales ledger, it means the trade receivables. And for purchases ledger, the trade payables. Your customer, the suppliers that you have to pay. So, but before we go into sales ledger and purchases ledger, what are the advantages of control accounts? Number one, they can assist in locating errors when the total balance fails to balance. You are opening the control account so that you can detect the error that is in the trial balance. Okay. Two, they approve of the arithmetic accuracy of the ledgers they control. The control account, where if you use the control account and it balances, it means that the arithmetic accuracy of those ledgers are cool, are fine. Three, the information is available immediately because it's trade receivable and trade payable. The informations are already available in the invoice. Is it clear? They help to reduce frauds as the control account is prepared by someone who has not been involved in making the entries in those ledgers. Like I told you earlier, whenever the control account has to be prepared, it's not prepared by the bookkeeper. It is prepared by someone who doesn't know or who has not recorded any transaction in the ledger. They provide a summary of the transaction affecting the trade receivables and trade payables for each financial period. So they provide you with the summary of your total receivables in terms of trade, your total payables in terms of trade. Because when you are preparing the control account, you have to record all your trade receivables in your sales control account, and you have to record all your trade payables in your purchases control account. Is it clear? Then we have now going to sales ledger control account. For the sales ledger control account, we call it total trade receivables account. Total trade receivables account. So what do we use the sales ledger control account for? It's an account summarizing all the accounts of the trade receivables, all your credit customers. You know, your customers, the customers that pay, you don't need to record them. They get their receipt and the cash is either with you or in the bank. The transaction is done. But we're talking about credit customers. So you use your sales control account to find errors with the records you have in terms of your trade receivables. So what are the items that we have in the sales control account? Sales is always you extract it from your sales journal. Sales returns, you extract it from your sales returns journal. Receipts from credit customers, that's from the cash book. Discount allowed to credit customers is also from the cash book. Refunds to your credit customers is in the cash book. Irrecoverable debts written off, you don't have to have a cash book for that. You don't use a cash book, you use a journal. Then, so sales ledger control account is drawn up at the end of the financial period. Mostly it's at the end of the month. So the total of the balances on all individuals' credit customers' account should agree with the balance on the control account. If they differ, it indicates that there is an error in one of the customer's accounts or an error in the control accounts. So you need to make further checks. Do you understand? So when you prepare your control account and it doesn't balance, it means there are errors. When you make your sales control account and it doesn't balance, it means there are errors in the customer's ledger. Or in the course of you recording your control account or posting your control account, what you're supposed to put in debit side, you put it in your credit side. Like dishonored check, it's supposed to be in the debit side. Maybe you put it in your credit side. So it will not make your control account to also balance. Is it clear? Yeah. So we have questions now. Yeah, now we go to sales ledger control account. Here it said, Shweta maintains a full set of accounting records and prepares control account at the end of each month. She provided the following information. March 1, sales ledger control account balance, 1,200. So this is the balance brought down, 1,200. March 31, the totals for the month. These are the items. Sales journal, 4,890. So this is sales. Sales returns journal, 250. This is an item for returns. Check and bank transfers received from credit customer, bank, That means banks, you check you receive from your customers. Discount allowed to credit customers. You gave a discount. This discount allowed.
Yeah.
So let me just start immediately. Sales journal is going to be a debit balance.
Yeah.
Okay. Sales returns, a credit balance. Check and bank transfer received from the credit customer. You receive the check, so it's going to be a credit balance here in your sales ledger. Then discount allowed to credit customer. You gave discount. It's going to be on the credit side of the sales control account. Cash received from credit customer is going to be on the credit side of your sales ledger control account. Cash refund you pay back to your customers is going to be on the debit side of your sales control account. Check received included in the above figure in this amount, later dishonored. So dishonored check is going to be on the debit side. Irrecoverable debts, you make preparation for irrecoverable debts, so it's going to be on the credit side of your sales ledger control account. So look at the analysis. So sales ledger control account, the date, details, folio amount, date, details, folio amount. March 1, balance brought down 1,200. On 31st of March, what you're going to have on your debit side is dishonored check, which is $80. Your total sales, 4,890, and the cash refund is also a debit balance, which is 19. Then on the credit side of your sales ledger control account, your sales returns. On the credit side, the cash received by customers, check received from customers, discount allowed to customers, irrecoverable debts, provision for irrecoverable debts. Then you add all together. This is the balance for this one, which is 6,189. You take it away from the balance here. You see your balance carried down. So 1,825 is the balance brought for down to April. So this is the sales control account for March. So the balance on the credit side goes to the debit side of your sales control account for April. So if you are starting April account, your balance brought down will be 1,825. Is it clear? Okay.